Hi friends, good week. How are you today? This is Vladimir and this is the weekly review for the last week of January 2013. This is 27th of January and this is the weekly review, and as I said on the previous week, we are in front of opportunities. I was talking previous week about many many euro pairs, and this week I'm going to discuss about them as well. I'm going to talk about it again. And the reason for that is because I believe the euro will build the overvalued, complete overvalued, and I will explain the reasons for that. And something huge is about to happen for the euro pairs. That's my opinion. So let's begin. You know what, this is the chart of the euro dollar, and that's how I see these things. We in 2013 most likely we have official world war, and the official world war I'm talking about, don't be scared, I'm not talking about a real war, I'm talking about the currency war. Something like that never happened in history, never. And the first time, every country has a clear interest of devalue their currency. It's a clear, well seen war. We can see that Bernanke is doing all he can, all he could, just to devalue the US dollar. And he'll continue to do that. It's unlimited. In Britain, the same. They're printing money. In Japan, with the new Prime Minister, again, the same. The only countries still not doing that, and empires still not doing that, that's the Eurozone. And right now, people from Germany mainly start to say, hey, guys, the euro is overbought. It's risky for us. We're seeing right now good numbers from euros. We officially see good numbers, especially from Germany. The IFO and the manufacturing, everything turned to be good. But how will that continue with a strong euro? It's impossible, right? And the way I see the things, that all the, I'm not sure about the word for this, but all the developed countries like USA, like Eurozone, Britain, all the strong, the empires, they all based on imports, not just export. They all want to, sorry, the opposite. They all based on exports, not just imports. They want to export as much as possible, and they all are pretty much fighting, well, for the same market, especially Europe and Japan. And just think about it. They all will want to devalue their currency. They all import for China, from China, for example, because it's cheap, and they want to export their jobs to also where it's cheap, to prepare the things, right? To create things to China, Taiwan, and with a strong currency, they export harms them. So, from my point of view, that's exactly where the euro is heading. Let's analyze that from the monthly chart, and we'll discuss about it later. On the monthly chart, technically, there is room to go higher. We can see it 135, we can see it 137, maybe even 140, 142. It's also possible. But in these areas, we most likely will get a bearish hidden divergence on the monthly chart. It's going to be monster. Of course, it could stay here and suffer from here, and create a rise here on a flat area, flat range, and still to create a clear hidden divergence on a monthly chart. On a weekly, there is a weakness, there is a clear weakness. You see that, you sense that here. There's a clear weakness. That's exactly what happened on the previous time. I remind you, here on 2009. Remember? After a drop down, the euro created the bottom like it did here, created the bottom, a rise up, volumeless rise, and at this point crashed to new low. And from my point of view, if Eurozone really, And not just me. I'm not some specialist on the financial and the things. I'm just talking from a simple logic uh, of simple economy. Of course, I'm not talking about the difficult, the complicated things. No, simple. Export is one of the things that the countries are based on, that the economy is based on. And if the export harms, it's, well, all the work all the work, all the job they're doing inside their countries is stuck, right? They have seen that they cannot export, they cannot sell, and it's bad. Hmm? And then start, of course, start to fire people because they're stuck with the things and blah 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 blah. And the unemployment rate is already huge in Europe, and that's why, from my point of view, the euro is making on 2013 most likely exactly the same stuff like it did in 2009. On 2009 it finished of 1000 pips a raise up, starting all the way from here. Could that happen this year as well? Of course it could. But the higher, the worse, not the better. And I think, because on 2009 we did not have that, only Federal Reserve printed money. But right now, everywhere, Britain, Japan, I guess, soon we will see that also in few years in Australia and New Zealand. I guess so. So, and euro cannot stay behind. So from my point of view, it's only a question of time until they do that as well. And I think that right from these areas, between 135 to 137, maybe a bit higher, as I was talking about it several times already, I think the euro is going to make a stop, play around. Most likely we will see that going back to 134, maybe even 133, playing around this range. Then I guess the euro can get another push up to the 140, 145, if the central bank in Europe will not intervene, as I afraid they could. And this way we'll see the euro divided, and then bam, another crash, maybe even to new lows, and that would be good for the eurozone. So, talking long, let's come to the point. From my point of view, as I said not once, 135 up to 137 should be the range where we should start looking for sell opportunities. Comparing that to 2009 raise, that's exactly what happened when the RSI, this is the first time, RSI reached closer to the extreme, then it crashed for like 700 points, then another rise up, and then another 500 points up. Now the euro dollar right now is up to 500 points. From my point of view, is about to create some top on these levels. RSI might push to new high, which means the euro could still create some high here. No idea where exactly. And here I expect it to drop down 134, 133, and in case it makes the break below 132.40, we are going down all the way. So that's my opinion about the euro dollar. Every up move. Should we buy in this case? Well, I don't think so. I really don't think so. There is no reason fundamentally. There is no reason logically. After the bearish cycle that should come and will come, the question is when. Maybe this week, maybe next week, maybe in few weeks. Then we could look for buy opportunities. Yes, as long as the euro holds above the 132.40. That's my opinion. And if you want some extra confirmation, take a look on this beautiful pattern on daily chart. This is a bearish butterfly harmonical pattern with a range in between 135 all the way up to 135.60 or so. That's the range, which also say retrace down to 134, most likely 132.80, and then so that's the reason why I keep my bearish against the euro. Of course, on the 4-hour charts, if we go back, there is a divergence on a big part here, these highs. This is a triangle that was broken up, right? Triangle is broken up, which means this leg would go and be duplicated. So we are coming to the end between 135 to 137 most likely, and with the divergence forming there and with the bearish daily candle patterns, I think it could be a good idea to start and sell the euros. The next pair to pay attention to, of course, related to the euro. This is the euro pound. Right now we're on extreme divergence. RSI crossing above 80. MACD created completely new high. Right now double top on an MACD. We have let's turn to weekly. On a weekly chart we have Bollinger Band duplication. We have a monster resistance right here. From my point of view, the euro pound is again is going to make a retrace. I expect it to go back to 084 as a first stage, then most likely to 082, maybe even lower. For longer run, I still think euro pound could go and reach back the 087, 087.50 even, before making a real huge drop down. And well, if it goes straight to 087, which it could, there is no reason for that on daily, but still, it could keep push slow, volumeless push, keep push slow, and then drop down for something like 400 or 500 points. Definitely time to be in the euro pound. I'm already in, I'm already attacking that, and from my point of view, 086 is a very critical level, which is 085. 20 to 40 range is also very critical level. If it comes above 086 and going to 087 plus, which could happen, and there I will just attack more, because that's the areas where it's really overvalued, and with the current divergence, with the extreme divergence, and the divergence is building, and the volumeless market is building, and the confirmations from weekly, from my point of view, it's only a question of time until we get a bearish cycle. And now, the only pair that I believe that could go higher, this is the Euro Australian. I've been talking about the head and shoulders on a weekly chart for a long time. And finally, for the first time, after the first attempt, it did not break it. On the second attempt, it breaks up. Not just that, the Bollingers, as you can see, let's put the lines here. Okay, the Bollingers are widening. So, I think euro pound, this is by the way also, if we measure, first really important resistance, the second is something like here, the third one, the monster one, is on the high. So we have on a monthly chart, weekly and also monthly, as you can see, there are all the reasons for that to keep going higher. I'm not convinced it's going to happen one way. I think it's going to, based on the daily chart, it's going to play around the 130 or so, making some retraces, but after the retraces I believe it could be good trade opportunity. And if I compare the euro that should go lower and the euro Aussie should go higher, with that means that the Aussie dollar has all the reasons to keep going lower. And from my point of view, the Aussie dollar, if it makes successfully break below 103.50, and it really holds below it, I would be even conservative and say figure 103, the classical support. If it managed to break and hold below, oh, there I think sell and sell full power. But before that, for some short-term opportunities, pay attention for the gap level, which is 103.80 on the 4-hour chart. This is the support level, as you can see. This is also a trend line level. Pay attention here. This is a trend line level, 103.80. We can go and form here some divergence right here. If it makes it and holds on a gap close, right here, with a divergence, with some pattern to be created, that could be a very interesting buy opportunity back to 104.40. or even higher, back to the next resistance around 104.70, 105, for example. This could be very interesting short-term opportunity. Euro, Aussie dollar, it is. That's my opinion. And now a few words about the yen pairs, which are, from my point of view, very interesting. Dollar yen, well, I've been talking about that for a long time. The weekly chart is over completely extreme divergence, extreme everything. Beautiful weekly resistances. The government reached what they wanted. Now pay attention for this scenario. You see this triple spikes below the candles? My friends, It means that the bulls are getting out. That's exactly what it means. It happened here on March 2012. Right after that, we remember what happened. It happens everywhere. Every time before we get some, we get a move, and then some before the retrace, there are position closing. Pay attention here. 1, 2, 3, 4 spikes in a row here. Spikes, in this case, above. You see, above the bearish candles. So that's the positions where the traders close it. Again here, there's an up move, closing. You see all the spikes from bottom here, right, from below the body of the candle, and we got a retrace. Again, up move, spike, spike, spike. Right, here we go, and a down move, and we can go back and back. Here we go again. Where the spikes coming, here we go again. 1, 2, 3, 4, and then bam. It means the bulls are getting out, and there's a reason for that. Japan did what they want, but there is a big, big, big but. The other countries, the other economies are warning, especially Euro. Japan and Euro are fighting for the same market with the export, and Euro is affected because of that. They really worry. They really, really worry. I mentioned the reasons before, and that's why, from my point of view, the yen pairs are creating it up. I said it for many weeks. Actually, I started my attack much earlier, and I'm holding this position because I do believe all the cycle started right from around 110 or even earlier. All the cycle will be completed down before the pairs will continue for new highs, and they could, and most likely they would. This world war of currency is just on its beginning, and I think that the guys in Europe are not so clever, all regards what the others are doing to them. So until they really wake up, which they tend to make when it's almost too late, until they really wake up, we'll see some plays around. And from my point of view, we're creating a cycle. 123, 124, then 127, 128 as the levels to pay attention to. I do see a very beautiful cycle begins there. It could start any moment actually, because we have the weekly extreme, we have the daily classical huge divergences. The last time it happened on the up move, even the March 2013 wasn't like that. The last time it happened something like that, which was very strong up, and it was annoying, was here. And I'm talking about 2007. It rises up like crazy without volumes. You see that? Without volumes, it played straight, and we all remember what happened then. I don't think it's going to happen again here, a drop of 2000 pips, no, but I definitely think we're going back 115, 112, and in personal opinion, on the deepest cycle, not sure even it's going to happen this cycle, but on the cycle, on the final cycle, wherever it comes, we're going back to 108. That's my opinion. And well, that's why for all the yen pairs, I think every sell opportunity you have, it's a good chance. For pound yen, well, from my point of view, 147, 148, maybe even 150 are classical level to pay attention. It means it's going to play around the stops. Here again, also, I'm there. I'm attacking that. So I really believe on this cycle. We have had 20 candles right, more than that. We had the retrace down, but the 20 candles started officially here, and the retrace never take us here. So every up move should take us down back to 138 or even 136. And from my point of view, that's exactly what we should pay attention to. The next level for the pound yen to pay attention is 147, 148, maybe a bit lower. If it makes it, of course, it could go and stop here with a double top or a false break and a close below, and then bam, all the way down. So, and that's relevant, of course, for all the yen pairs: Oz yen, Kiwi yen, CAD yen, Swiss yen, whatever you choose, whatever take a look at, same story. That's my opinion about the yen pairs. I didn't change from the last time. Remember the pound Danish krone I was talking about, which is exactly the opposite of the euro pound. Really oversold. Beautiful down move here. There is a trend line meeting us very soon. I think it reached time to attack. There's a perfect support, and I think the retrace is about to start. In case not from this area, then the next area, the next support around 860 could be amazing for the, of course, for pound Danish krone. So pay attention for that. And now, in few words, there is a wonderful opportunity, Euro ZAR. There is a beautiful divergence, continuing started, extreme RSI as well. But on weekly chart, we still aim higher. If you're a very aggressive player like myself, and you want to enjoy the swap, jump in. But only if you could allow yourself to hold some drawdown, because this pair could rise all the way to 1240, 1250 even, before making huge crash, maybe even higher. But with the weekly divergence and with all the scenario about the euros, it's coming to its end. So I'm inside because I love to enjoy the swaps, but I don't plan to attack before what 1240 to 1250 in between. But to enjoy the swap, this is a classical pair, classical opportunity for a really long run, and I'm talking about several months. It could be 6 months, it could be 1 year. I do not care, as I'm going to enjoy the swap, and I'm going to enjoy good, because brokers tend to pay for this kind of pair. Now, about a few words about the gold and the silver for the short term. I think that silver could provide some buy opportunity, silver and gold. I was talking on the blog post, it might go and drop down, especially if it makes the break successfully. Break of this trend line, which it did, with all the divergences, of course. Now, pay attention for this level. It could be a bit risky, but there is a beautiful trend line, a beautiful support level around 30, 90, 31. I think if it plays around right from here, we could get some pushback up for 50, 60 points. From my point of view, that could be very interesting opportunity. In case it breaks it down, stay away. Same for the gold. I think it's playing around the bottom, RSI playing around 20 as well. Well, I think this could provide one last push down. It's 1653, maybe 1647, right from somewhere in between this level. Maybe as the last one is 1640, somewhere from here, push up again. That's a good opportunity to buy, of course, with the candle pattern and with the divergence, as I think it might push back all the way to 20-minute 4-hour charts or even higher. That's my opinions about this beautiful commodity. Now talking about indices, not yet, but pay attention for the Dow Jones, which is volumeless, completely volumeless. This is a volumeless rise. The RSI is aiming very extreme. Something very interesting is about to happen. As I said, based on monthly, some disaster is about to happen, but on future, it's monthly chart. On weekly chart, there is a divergence. I am not convinced it's going to stop here. It could go for another high, which means we can still go to another high, but start to pay attention for a daily chart. It really comes to overbought, and we right from these stuffs in between here and something like 14,000 or a bit higher, we could get a drop of 300 or 500 points. Stay aware of that. And on this is the best way to follow that is the 4-hour chart trend line. This one, once it's broken, it's a very bearish sign, and I would not be surprised if we will get the push down again to something like 13,500, for example. Same about the S&P, of course, which is clearly volumeless rise, and same about the Nasdaq, which has difficulties to rise anyway because of Apple and Microsoft mainly. Apple and of course other technologies companies. Very bearish signs coming for these indices. The same of course for the Swiss index. I've been talking about that for a while, and the DAX, very interesting. For a long time from here, I'm talking about the short opportunities for the DAX. I'm very bearish in my opinions, not because of the daily chart, mainly because of the weekly chart. This is a monster divergence. Now, yes, I said it could go for another high, and you should be, if you trade such index or indices, you have to be prepared for the opportunity. It's going to be against you for a while, because when the drop comes, it comes very big power. I remind you, the previous time, 2010, if you remember, for those of you who've been with me here, I was talking about the weakness of the DAX here long time. And if you couldn't hold this run against you, you could not enjoy this drop against when it came. And I don't think it's going to be such huge, but I definitely think we're going back to this trend line. Yeah, sorry, this triple trend line. So there is a room, there is a potential opportunity to enjoy from that. If it breaks this line, oh god, something terrible could happen. But the first stage will be this line, and I think every new high is an opportunity to sell. That's my opinion. There is no reason for the rise. Yes, there are good data from there, but the situation in Europe is terrible still. Too much, too big unemployment rate, and as long as it's not solved, nothing really could happen. And if the currency war will continue, Europe will suffer more and more and more. And the only reason that makes me be cautious right now, this period, is too many analysts, companies, or whatever you want, too many say everything is okay. That's, from my point of view, exactly the time to be aware. And I think that in about, well, I would say something in between 2 to 5 weeks from now, something bearish, very bearish, is about to happen. Okay, something between 2 weeks to 5 weeks from today, I think something very bearish is about to happen for indices and for all the majors, especially the euro. Talking about the euro, I forgot one pair and I posted it on the blog. That was euro CAD. I will not talk too much about that. I will just call a top for a short term, and I will call a top around 136.50, 137 approximately. That's pretty much the level. That's a weekly resistance. Here we go, right? That's the one I'm talking about. Okay, that's what I'm talking about. And this is a trend line here. Okay, on a daily chart, that's a potential extreme divergence there. I think it could go and play around, and right from there, prepare for something like in between 300 to 600 points down move. And that's my opinions for the upcoming week. I'm glad to share that. And again, I said it not once, I will say it again. This is the time for long-term trades. And yes, they could go against you. Don't be afraid of trade without stop loss. Don't be afraid of that. Just keep your leverage low, negative even. Don't be afraid of attacking the next levels, because that's what the most correctly should be done when the pairs are extreme and when everywhere you can hear all is okay. I'm not saying something terrible is about to happen, but I think something should happen, and the reason for that is all the okays we can hear around. And of course, the currency world war that started officially in 2013. From my point of view, that's going to be very interesting war. Thank you very much for watching this video, and I wish you a wonderful week. Good trading. Your Vladimir.